I got to mark it. Marked. All right, let's start it. Let's go, go, go. How do I switch? It must be Monday. Oh, yeah, I have to click this button. 3, 2, 1, go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Greg Cadorn, and I'm here to 10x your Forex trading. Whoa, no, wait, no. Hey, my name is Wayne McDonald. I'm a currency trader. Oh, what is this all about? All over the place. That looks terrible too. I don't know. It's all terrible. Anyways, good morning. My name is Wayne McDonald. I'm a currency trader. I'm just like you. I'm here to teach you technical and fundamental analysis with an overriding goal of helping you put together trade plans that predict, really, we're on tomorrow. We're really here to plan tomorrow. So, yeah, the new haircut's weird, huh? I don't know what to do with it. It looks funny on camera. It looks funny in the mirror, too. All right, anyways. Technical and fundamental analysis, really to plan tomorrow, the rest of the week, the rest of the month, the rest of the quarter, the rest of the year. So this is a complicated thing, or at least we tend to make it more complicated than it really is, and that's because we have emotions. So anyways, ask questions, get involved, and I will do my best to give you a positive impact on your trading, or have a positive impact on your trading based on my almost 20 years now as a currency trader. Cool. Also, guess what? I got the good foundation for our macroeconomics course, which I will be starting tomorrow at FX Bootcamp. Very cool, huh? Macroeconomics. Very cool. So I'm looking forward to that. And I like to build on it. So I know where I want to start. I think kind of where I want to end. It's mostly that we can keep stacking. So it depends. I haven't decided whether to give you a bachelor's degree in macroeconomics or a master's degree. So somewhere in there, right? So I keep thinking like, well, you know, when I was teaching you recently about the productivity gap between actual GDP and potential GDP, and you're like, well, actually, I should probably teach you how you get to a potential GDP. What are the factors of production? What is the solo model? All of a sudden, I'm like, wow. So I don't know. You might actually get a master's degree in macroeconomics. I'm not really sure. Not bad for joining FX Bootcamp, huh? Will it be saved? Of course it'll be saved! So anyways, yeah, cool. So thank you for being part of FX Bootcamp. Thank you for being part of Forex.Today. Now 17,000 foreign exchange traders. How cool is that? What a great community full of positive energy. So thank you for being part of that. Also, thank you for being a client of Traders Way. TradersWay.com is a foreign exchange broker. You're a foreign exchange trader. There should be an opportunity, you would think. They want to serve you. You need someone to serve you. So, hey, there you go, right? But there's lots of choices for you. So they're trying to lure you into their trap by giving you stuff up front like a community like this. They're trying to give you fast execution speed, narrow spreads, big swaps, great customer service. They're investing into your education here. Oh, wait, that's not a trap at all. That's actually something that you're looking for. But imagine the business model of them trying to earn your loyalty and respect first before they ask you to be a client. So give them an opportunity, huh? All right, the chat on here isn't working. It's funny, my YouTube chat isn't working, but my stream software over there is working. So I guess I have to kind of move this over, move that over, and put that over there. And maybe I can see this. Can I pop this out too? Hang on, just trying to... Anyways, I guess the best thing is change the camera. I don't know why my YouTube chat isn't working. How funny is that? Come on, YouTube. Cool. All right, so here we are. Okay, here we are. Very nice. What do we see? Well, there's a few things going on. One of the things we're looking for, remember back on the first day of January, I expected your dollar strength. I said there's no technical reason for it. Now we're into the beginning of the middle, right? This is actually Mutual Fund Monday, and we talked about that maybe being a starting point a couple of weeks ago anyways, right? If you remember that, Mutual Fund Monday, the Monday after non-farm payrolls. So anyway, so here we are, and it's now a couple of days, maybe 3 days into a dollar strength move. Huh. Okay. Sander, do it again. Actually, I probably won't be around most of the morning. I have a dentist appointment. So as soon as this is over, I got to run. So I probably won't see it until this afternoon, and by then there's probably 800 emails. So if I don't get to it today, send me again tomorrow, okay? Lalo says, can we talk about monetary policy, specifically contrary monetary policy and expansionary? Yeah, okay. Contractionary and expansionary. It's at FX Bootcamp. There's a whole course on that. I break it down. We do the math on it, in fact, Lalo. So fxbootcamp.com. Insert a credit card, and you will get a 16-hour overview. So there you go. It's already done. All right. So I don't know. So there was lots of planning for this and different scenarios in which this might occur. Right? We had a situation that kind of looked like this. We had a situation that kind of looked like this up off the monthlies, right? And then of course the one version would be it wouldn't work at all, right? All right, so one of those things seemed to have worked, and it looks a lot like Plan B. Plan A was sell it off the sell zone, right, off the top. In fact, I was short here, if you recall. And then the next plan was sell it up on a higher time frame. But there just might be profit taking early in the year. So I don't know if this is right. I don't know if I'm right. I don't know if I get to declare some sort of victory, but there's definitely a lesson in there to be learned. Would you agree? How many people would agree? It now looks like there just might be something to what we talked about. Now, does it mean you're on this trade? Actually, probably not. One thing, especially when you're learning how to trade, you get caught in this situation of watching it happen slowly. Do you guys know the story about the frog in the pot of water? You turn the heat on under the pot of water, and the frog just sits in the water, and the water gets hotter and 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 hotter, and eventually boils alive. Nice story. Yeah, nice story. But the other part of the story is if the water was boiling, you dropped them in, you'd pop right out, right? So you just slowly cooks to death. Well, here it's one of these things where we talked about this whole uptrend. It's super bullish, right? Remember that? Right? A super, super bullish. off of everything. In fact, we predicted this bullishness. Great. Up and up and up and up and up and up. Right? The predicted exit was here. That's where we got out. Why would you exit there? Is it because you know for sure it's going to drop like a ton of bricks? No, you're just assuming that that's a great place for profit taking. Remember, anyone without pivots would have no idea. In fact, this was a time-based decision between the 16th and the 19th of the year. And really, it's a offensive driving technique, if you will. Right? You drive offensively to avoid the car accident. In this case, there's a more than reasonable chance of giant profit taking, and exiting here isn't necessarily predicting the top, but more like anticipating some profit taking earlier in the year and avoiding giving back profit from this move. So it's a defensive move by being offensive. Offensive, not offensive. Offensive. Okay? And we are now, technically speaking, lower than our exit. And that's the point I want to make. We are now lower than the exit, which we predicted, by the way, to the day down here. So, interesting, right? How many people went through that full process with me? That full process. In fact, we talked about this process, I'll say August. I'll throw out that. August. Okay. So one of the messages I gave you last week is if you don't remember it, it didn't happen. In fact, if you can't remember then and it didn't happen, then you weren't actually alive. You might have been breathing or something, but if you can't remember it, then it never happened, and then I'm not sure what you were doing. If you can't remember what you were doing, then you weren't living. You weren't alive. You have to be cognizant, right? So you have to fight to be cognizant. So it's interesting, right? Is this a big, giant, scary move? No, but if you think about it, if you had exited in December and you took the week off, or in fact, you took 2 or 3 weeks off for holidays and spent them with your family or with people too beautiful to hang out with you, one or the other, you could be kind of just coming back to the market and have missed generally nothing. Okay? So, very interesting. So now you got choices. Your choices are, do you expect this to continue down, or is this soon to become a buying opportunity? Once again, I don't know the future. Okay? So you make decisions. Okay? And I believe I drew this giant arrow on Thursday. Friday was non-farm payrolls here, which is a second chance entry, right? And now we're way down here. Isn't that interesting? How cool is that? Okay, so make sure you write something down. Leave yourself a message. Okay, there's a couple of things that occurred that we predicted, these wild and crazy predictions. This sideways move was predicted. The November rally was predicted. The exit, right? And now this new decline. And this will not be the same next year, but it'll be similar next year. Okay? You will see this again in 4 years. Okay? So write yourself a note, because you know most people here will not remember any of this 4 years from now. Okay? Think about that. Most people here will just not remember it. They're not paying attention. They're not taking notes. Just think of this as going to university. Okay, how many people do you think at Harvard take notes while the professor is lecturing? Yeah, every single person. Okay? So, take notes. Yeah. Okay? And that's a learned process. I think when I finally get the book club up and running, one of the things that you inadvertently might learn is note-taking. So I'm designing a process where all readers will be able to take notes in a systematic fashion, which is kind of nice because we don't want 100 people reading books and submitting 100 different styles or techniques or quality of work. Okay. So it'll force you to read in a way that you're fulfilling your note requirement, which is kind of interesting. Okay. So here we are, very cool. Small little victory maybe, I don't know. But I'm very, 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 very happy that we were lucky enough for this to work as well as it did. Okay. Cool. All right, so let's move on to the next, or do you want to like drop in and day trade this or something? Okay. Look at this. Dollar strong versus absolutely everything. You're welcome. Okay. So how do you want to trade this? I'm going to assume we're dollar bulls. You don't have to be, by the way. Okay. So I would look at things like this. Projected top or a reasonable top, right? This is an R1. Okay. Which, by the way, predicts an S1. The next part of this kind of looks like a double top to me. Let's try to get this drawn. I'll draw it with a smaller. Okay. Kind of looks like a double top, right? Double top, but at R1. A double top just hanging out somewhere generally isn't as important. You have to have a reason for the resistance. Now, maybe it's a psych level or all kinds of things, but you have to have some reason, and that's pretty good. Okay? Then what? Lower low, lower high, roll reversal. This is standard now price action, selling off the roll reversal after the double top. We also call this a 1, 2, 3. We also call this a hammock. Okay? You guys following me? Okay? And now the next part would be something similar. Roll reversal. And you're doing this. So again, this would be part of the price action course. The two most important things I think you need to know technically are pivot points and price action. Okay? This is a message to all you newer traders. You can learn anything you want. There's lots of different techniques in the world, different styles of trading. They're all correct. If you were to ask me what the two most important things are, price action and pivot points. So quite seriously, you can get rid of all the moving averages. You can get rid of all the oscillators and all that kind of stuff. The one technical indicator I would like to have are pivot points. And really, they're just measuring standard deviations, which means I'd like to know when it's overbought or really, really overbought. I'd like to know when it's oversold or really, really oversold. Does it tell me what to do? No. But as a bull, knowing if I'm getting a good deal to buy, or if it's so overbought I should probably scale out or get out and take some profit, then it's very helpful. Casey says, what about VWAP? No, whatever. It's probably great. Not necessary in my opinion. Okay? I'm telling you the two things, right? So, my son is slowly getting interested in trading. Luckily, he's a math genius. He's in the gifted program for mathematics. And I'm going to teach him about price action, which is the way that the markets behave. In this case, reflected by price. And pivot points, again, are just simply overbought and oversold conditions for the market in general, right? So this predicts tops and bottoms, and this predicts the way you get to tops and bottoms. Everything else, I mean, it's all helpful. And almost everything that you look at, whatever your strategy is some form of the same two things. What's price doing, and what are the market conditions? So this goes all the way back to like my book I wrote 1,000,000 years ago. And the whole thing, I used multiple techniques to separate price from market, price action from market forces. And then again, pivot points are the market, price action is price, right? I'm separating price from market. So I have to say, well, what kind of market condition am I in right now? Whether I'm a bull or a bear is irrelevant. I still have to see what is happening. And then I have to adjust. So if I'm a bull but this suddenly looks bearish, I need to temper my enthusiasm and wait for the next opportunity to buy at a right price. Well, what right price and what right time? Yeah, that's how you trade. You have to make that determination. Everything else is probably doing something similar. I think this is the simplest. And I think a bird just flew into my window. Sorry, fella. Hope you're okay. Okay, so this is simple price action. Right? And you're going to do this all day long. Okay? Where's the big threat to that bearish move? This price and this price. And then, of course, this price. And the interesting thing is, if you're using the technique properly, this is saying this. So one way of looking at it is I have enough information not to conclude that something's going to happen because you don't know what's going to happen, but there's reasonable information here to say at least we got some sort of range set up. Okay? So we'll just call this 73. We'll call this one 70, 300 pip range. So if we are down here around 70 and I'm a long-term fundamental bull on this pair, then I should be prepared to buy, even though it would have fallen for days and days and days and days, or even weeks and weeks and weeks. Irrelevant to me as a bull because I'm not a bull because of price action. So the price action just tells me where we are in a moment of time in the ebb and flow. Okay? If the tide comes in, I'm predicting at some point the tide will go out. And when the tide goes out, at some point I'm predicting the tide will come in. Okay? It's kind of like predicting the weather based on seasons, right? Like, it's a cold day here in Georgia, but I predict it's going to be warmer by July. July. Okay? You see that? So if I believe we are in a bullish year, but based on this where we are in the season, potentially bearish, well, I could sell all the way down. Simple price action gives me the opportunity, but I have to stay focused that, okay, it might be snowing in Saskatchewan right now, but by May, a farmer probably needs to till the soil and plant some seeds. Even though today it's snowing. Cold as hell. Okay? Where I come from, if you believe in hell, where I come from, it's not flaming hot and magma, right? In the nether, right? No, it's freezing frickin' cold. Freezing frickin' cold. Anyways, so down. Great, good. So I know where we are in the context of where I think we're going to be going. Every once in a while, you got to make a left turn. Even if you're trying to go straight north, every once in a while, you got to make a left turn. Why? The road varies. Okay? Unless you're in an airplane, then you can just go wherever you want. Cool, right? Yeah, Hoodoo's like, dang it! I've heard the pivot point price action thing, but I keep forgetting it. Well, that's why I'm here, I guess, to keep you focused. Okay, this is Daniel's trade. Our friend Daniel gave us a trade plan based on this double bottom, and Daniel had a projection of this heading up beyond 130. Okay? So I think the other message you need to ask yourself and take yourself through is whether this changes your ideas. How many people get distracted here and change? Anyone willing to admit they talked themselves out of something they talked about for weeks? On's becoming pretty good. On's taking some good trades. Yeah. Well, Theta, I appreciate your honesty, and I'm telling you, the fact that you were that open and honest tells me you have a very good chance of becoming a good trader. Okay? Remember, like, if I ever start a mastermind group, one of the things I'll teach you is to go through your worst trading habits with your client. So if you can't admit it to yourself, how are you going to sit down and admit it to someone who has the capability of giving you lots and lots of money? If you can't admit it to yourself, you're certainly not going to, you're going to break down in a situation there where brutal honesty will always win. And bullshitting your way through a client meeting, even if you land the client, I don't think you got what it takes anyways, and you will be revealed. Okay? Cool, right? So how do you want to set this up now? Well, here's the thing. Trading down in here isn't a perfect setup, but it's there. And there's a lot of price action that has occurred since the Sunday market open. This would be a horrific place to buy. So what should you be doing now? Well, if you were a bear, see, if you're just chasing things around, then there's no hope for you. If you still do that, there's no hope. You need to radically change your behavior, which means you need to radically change your thought process. Okay? So if now you're suddenly bullish, well, this is the worst frickin' place to buy. And if you, right? So the whole point that I've been saying is you have to set this up, even when you're here, to be a bull down here. So when you're down here, you become a bull. Now that it's up here, you want to become a bull? Well, F you. No. What's wrong with you? Okay? Because now, what's going to happen? Well, those that said they were bears here, well, they're gonna take advantage of your incompetence. Right? If you're that incompetent, where you're selling down here because you think the thing didn't work and now it's up here, now you want to be a buyer again, you know you're going to get punished. You're just bad. Someone will take advantage of you. A bear is going to take advantage of you. So we know this is a bear zone. We know this is a bear zone. So this whole is a sell zone. Okay? We know that. It's factual. I don't have to, it's just there. Look, there it is. Okay? So we know that's where bears would sell. We just don't know if there are bears there, and if there are bears there, how many bears are there? We don't know any of that. But that's why you're supposed to be a buyer down low, so you can jam your stop, take a walk, and let it run. And if you get it right, you'll get paid. And if you get it wrong, you broke even. Who cares? But it's those that like come into the market a day or a couple of days late, and now they want to get in on the game because of their stupid FOMO. What a dumb emotion, FOMO. So there you go. So now if you're going to buy, you will be punished. Okay, you will be punished. Okay, so do what you got to do. Drop into a smaller time frame, obviously. This is only an hour. But, yeah, I can't imagine just this whole idea of you showing up now at the New York Open and now you want to enter a trade. It's just ridiculous. Okay, London Open looks pretty nice. Or last week, or Thursday. Okay. So anyways, we'll mark this down. See, I think at some point, if you were a bull waiting, because you know this bottom is the right shoulder, if you will, of a double bottom. Okay. Now, our planning occurred right here in the first hour of the year when I did that special webinar. Okay, so at some point you recognize this as a floor and you were buying dips. That's all. If you just stuck to your plan. Okay, all you had to do is stick to your plan and you'd be fine right now. Remember that whole patience and discipline thing? I know. Right? That's it. All you had to do is the one thing. Okay? All you had to do is the one thing. Now, when we look at swing trading, and then I'll move on here. The swing trading has really simple rules of engagement. And based on where you're taught in the training course to put your stop, you may have just simply bought here and walked away, and the strategy took care of you. You were done. During that webinar, again, I did a special webinar for my swing trading group. We got together Sunday at the market open. This is, right? Very, very special. Even though there was a massive dollar weakness trend that went on for weeks and weeks and weeks and weeks, we got together here because of the potential of this. And basic swing trading says if you think up, this is going to be your price. Okay? And your stop would be down here. How many people agree with that? Based on the simple rules of engagement. Yeah, totally. Well, do I need VWAP? What the hell is VWAP? Who cares, right? So that's it. So it's whether we truly have the patience or discipline or not. And one of the best things I think that may have occurred, there's two outcomes I hope for you. One, you did your job, you took it, and you're getting paid. I still think, regardless of how much outlook you were given and how much training you were given and how much focus, I think most of you still missed it. So you could get emotionally upset about it, or you just had the most amazing learning experience that you've had in a very, very long time. And now you have to say, that I will never miss that ever again. Okay? That's how I want you to react. If you didn't take it, and we talked about it, and you still didn't do it, then that's it. That's the thing. Abel was too early. Well, see, if you follow the rules of engagement, and on the exact hour I did this webinar, we were here. So if you bought it and put your stop below support, you were done. It couldn't have been too early. We were there in the exact hour of the market open. Right on. So I don't think there's two, right? It's too early, but there you go. You got 24 total open trades. Yeah, they're all -3. Awesome, Conrad. Awesome. That's really good. What an amazing improvement, huh? What an amazing improvement. No. That's irrelevant. And by the way, compared to the account size, it's probably appropriate. But I would love you to have that same amount of risk associated with trades when you're managing millions of dollars. Okay? Right on, Conrad. Well, you're a big part of it. How much time do you have into the group now? Just shy of a year? Yeah, what a great year. Let me ask you this. Before joining the group, were you ever in a situation where you had 24 profitable trades open at one time? Yeah. Cool. So anyways, just remember, remind yourself, I guess, of whether this move fits inside your bias or if it's just seasonality. Remind yourself, always stay, like I say, stay small, stay humble, right? Always remind yourself that the thing you did was you bought at support, right? And yes, there might have been some seasonality to that, but you bought at support, great. There's no genius behind it, really, right? We have to stay small and stay humble. And that this is some profit taking or whatever you believe it is. And ultimately, a fundamental flow of money is going to drive these things. And so, just stay awake, stay focused, right? I try to tell myself at all times it's not genius that makes it all work. And the hardest things will be knowing when to get out of these beautiful trades. It's hard to get out of 24 profitable trades. But that's where you have to be strong. That's the discipline part. Okay? Cool. Is anyone ready to join a mastermind group? I was thinking about it. I'm kind of itching to get it going, but I don't know who's ready. Yeah, I haven't qualified it though, have I? I think it'd be a group for like 25 people. And I would imagine it would be 10 grand. I'm just throwing out a number there. 10 grand a year. You can stay in as long as you want, but when you leave, you're out forever. Yeah, I don't know what else to call it though, Mahir. It would have to come down to a different idea, but yeah, it'd be different. La 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 la. Okay, so anyways, there we go. But this is the giant risk factor to Conrad's trades. And the next one is up here. Okay. Now, another way of analyzing it, because that's just, I'm forcing that into my own models. The other way, it's similar but different. Someone could argue against me technically and say, Wayne. You can't count that as an M2. That's right. That's clearly an S1. And then the S1 would say, this is the challenge. Basically 29 and a half. Okay. And then, okay. Now remember, I keep telling you that pivot points are just another form of standard deviation, right? Because a lot of people will say, oh my God, and this is also a double top. That's amazing. You're like, whoa, dude. The math sees this. That's why this is resistance. Right? That's why I like pivot points. It's just math, bro. You're like, it's amazing. It always ends up being a double top on the R1. That's uncanny. I'm like, no. That's why the math says, we'll make this resistance because of that. Right? So anyways, but as long as it's math, I don't care. But so you have to make a decision. Of course, I don't know what the right decision is, right? But you could say this, okay? And that's not a bad place, by the way. If you believe by the end of the year, USD CAD will be lower. Hey, dude, selling it just shy of $1.30. It's a pretty decent move, huh? Okay. So other questions you might ask, well, will this go up for another week? Will it go up for the rest of the month? Will it go up 2 or 3 months? How the heck would I know? Okay. Okay. But if you can figure an answer out to that question, guess what? You have alpha. Okay. So Jimmy says, hey, say something about pound dollar. Well, check this out, Jimmy. I might not. But I want you to think about this, James. I just analyzed in great detail. Now, half of this analysis is USD, even though I just went through this whole process with USD CAD. Okay. So you already now know, generally speaking, my outlook for dollar. So now you just have to ask yourself, do you want to buy or sell Great British Pound? They're stuck with COVID 2.0. They're locking down. They've locked down their economy, and they're going to lock it down even more. So, what do you think about economic expansion? Do you think the Bank of England is going to go negative on interest rates? Okay? You need to ask all those questions first. Okay? I can throw you into any technical trade you want me to, but I would like you to answer those questions first. Okay? Yeah, they did speak about it. Yeah. Well, good thing I brought that up then. Okay. So, let's look at this one. Here, right? This is the first hour of trading. Okay. When we predicted a reversal of the market. Okay. Now, I have to remind you, Okay? Again, I'm just trying to teach you, and I need you to remember. At this point, when we were here, and I'm probably even in here somewhere, I said, if this pound dollar reverses, like I think there's high potential for, there's nothing on the chart to indicate that it's going to happen. So even though this is ridiculously up, everything says up. My point is not everything is technical. In fact, technical is just you trying to find the right price and time to enter in your trade. It doesn't ever tell you what to do. And I think you're told over and over and over again otherwise. You're looking for the Holy Grail. You're looking for the EA that will make you a millionaire. Really? Oh my God, seriously. Set it and forget it. Let the money rain. Oh, I have money, don't I? How do I do that? No, I don't have it set up on this. Too bad. Let the money rain. Yeah, boy. Woo, it's so easy. Right? It's so easy. It's so easy, I got my Roomba trading for me. But it sucks. Well, it sweeps, actually. So if any of this is a believable move, and it's not on the charts, then you will have to be in a situation one day where you understand. That's it. And if you understand, then you can provide value. Okay? And that's my message over and over and over and over and over again. Okay? You got to get off the quick and easy train. And I don't think anybody here actually has that. Maybe some newer people. But the get rich quick or get rich easy, I mean, nobody thinks that way. Nobody successful even thinks that way. Okay? Otherwise, you'd have Elon Musk. He would have quit being an entrepreneur when he made $100 million on PayPal. $100 million. He could be done the rest of his life. Then he started Tesla. Then, well, he could have been done the rest of his life. Well, then he had what? Solar City. And then he started SpaceX. And then he started the Boring Company. And then he's, and all of a sudden it's on and on and on. Who builds a rocket company to compete with NASA? That's insane. Who sends money over email without even being a bank? That's insane. Electric cars against what? Ford and Chevy and Toyota? There's no way you're going to be able to compete. Okay? Elon Musk, for example, is now the richest man in the world, and I don't think he ever looked for the easy and quick buck. Okay? Cool. So anyways, we got massive across-the-board dollar strength. Yeah, I know. How nice is that? You're welcome. But that's my alpha. That's mine. That's mine. I've been standing up here. It's coming. It's coming. It's coming. Be ready. I don't know when. I don't know where. I don't even know why it's going to happen, but it's going to happen. So be prepared. Be prepared. Eyes wide open. Be prepared. Even if you're a bull, be prepared for the pullback, because then you can manage this risk that you perceive. But if you don't perceive it, you're not going to see it and you're going to get blindsided. Okay? Lalo, I've already answered that. There's I think a 16-hour training course inside FX Bootcamp that addresses mathematically as well as principally how expansionary and contractionary monetary policy is. First, I teach you how it even happens. Then I teach you why it works. And then we're moving charts around. Then I'm showing you the math, and you're doing the math. So I can't give you a 16-hour lecture in a free webinar on YouTube. But you can insert a credit card and get the lecture. You can start today. And in 4 hours, you'll be managing the balance sheet of a commercial bank. Because once you understand that, then I can teach you how to manage the balance sheet of a central bank. Okay? So just put the money in. Insert a credit card. It's easy. Okay. Let's take a look at this. Now, last week, I was talking about some sort of decoupling where I said, based on my idea of dollar strength, that I would have expected to see yen strength because the same macro forces influence the Japanese yen and the USD. And I'm very happy to see CAD yen down, pound yen down, Kiwi yen down, Euro yen down, Aussie yen down, because, oh my God, they were all bullish. And I'm like, really? I would have thought down. Booyah. Okay? So once again, it's not, my point isn't that I'm right. The point is you were prepared, and I hope, right? I hope you've had an amazing learning experience, one that will change your behavior. Okay? One that changes your behavior so you react or plan and prepare better next year and the year after and the year after and the year after. Okay? Okay? What do you think? Who's happy right now? Who feels they've had a positive learning experience? How many people here have had a positive learning experience? Something that they could take with them. If you're happy and you know it, click the thumbs up button. If you're happy and you know it, click like. If you're happy and you know it, click like. All right, I won't go the whole song. Yeah, oh, you know, look at that. Whole bunches of people are dropping out. Whole bunches of people are dropping out. Instead of clicking the like, they're like, I'm out of here. This sucks. Wow. Wow, really? Amazing. So how do those people? I almost want to be there like an exit poll. Okay, you just dropped out of the webinar right where everyone was confirming they've had positive learning experiences. Why would you do that? He's a hindsight trader. Even though he predicted all this 16 weeks in advance, he's a hindsight trader and I hate him. He's an arrogant prick. Yeah, I know, right? Yeah, it's hard to be confident and not give people the feeling that you're arrogant. It's a tough one, actually, isn't it? Thank you, Maida. Muy bien. Gracias. It's hard to be confident and not perceived as arrogant. You might not feel arrogant, but there's always going to be people that say, oh, he's just an arrogant prick. Well, I'm forcing myself day after day after day to stay confident. Because as you saw, even when you have sort of analysis prepared, it's still, you must be confident and do it, you know, and it's difficult, isn't it? Maida loves my Spanish. Well, my Spanish is better than my Chinese. So anyways, thank you for not dropping out. What can I do? I don't know. Okay. Still, right? Half the people watching right this second haven't even clicked like. So I wonder what's going through their minds too. I don't know. But so let's take a look. You know, let's do this. Let's go look at the indices, the commodities, the exotics, and then we'll go through the calendar. What do you think? Smell like a plan? Okay, so then let's go first. Let's do indices. Okay, pound is fairly weak, although is recovered a little bit. Yen getting strong. Whoa-oh, dollar getting strong. Whoa-oh. APAC still doing generally well, just not against these guys, right? Euro sort of stuck in the middle. Okay. CAD strong, but has come off the top and then, right? So anyways, which one would you think is weaker? Well, there's sort of the medium term versus in the moment, right? So ultimately, it probably doesn't actually matter whether you're short Aussie dollar, Kiwi dollar, CAD, because if you're looking at this part of the move, right? Let me do it this way. If you're looking at this part of the move, not right, then I would say Euro's weaker than Aussie, for example. But other people might be looking more at like this move. They might say, Wayne, I think Kiwi is strong. Wayne, I think Aussie is strong. I think CAD is strong. Okay? I wouldn't disagree with any of that. What we're doing is you're talking, let's say, more market, and I'm talking more price. Okay? Generally speaking, CAD is strong, should be strong. I can explain why it would be strong, but it doesn't have to be strong today or the rest of the week or even the rest of the month. Okay? Now, one of the things I think is going to make me right, if I can be so bold, and again, I'm reinforcing my confidence here, is if the yen and dollar get strong, I have to reinforce that a few weeks ago, or let's say over the course of weeks, one of the things I was telling people in the swing trading course, for sure, maybe these webinars, but maybe the private ones, that there's always a reason and I never know what it is. This year might be Trump gets impeached or kicked out, one way or the other. I mean, that move on the Capitol building was a pretty serious mistake. Right? He could have just cruised into La La Land, given everyone a $2,000 stimulus and disappeared into the pasture to stud, right? And instead, that was not a good moment for a president. So, why would that? It's just not good for business, right? And it doesn't actually mean anything, right? HK said, so what, that would make it, why would it make it strong? It's just the thing that makes people take profit. And that's the whole thing that I've been predicting, if you will. But fundamentally, does it even matter? No. And if anything, it's happening anyways. But when you get on CNBC and Bloomberg and every other news outlet, they'll tell you it's because of the impeachment proceedings against Trump or something, right? There's always some reason. But I might argue that it was going to happen anyways. And if Trump wasn't likely to get impeached, then it would have been something else. And the other thing, whatever they would have said it was, if it wasn't for Trump, they would have said it was something else, and that would also not be correct. What I've been trying to teach you every single year is it's just seasonality. Okay? Reason, it's not that they're manufactured, it's just people have to have a reason, and it's almost never, quite correct. It might be somewhat true, but it's not likely mostly true. Right? Okay. Dumb question. What does seasonality mean? I'll give you the brief example, and I need you to think about it. When it comes to seasonality, the best example I can always give is a farmer. Okay? You know that you plant in the springtime and you harvest in the fall. In the middle of the year, if it gets too dry, you add water. If it gets too wet, you don't add water. If there's too many bugs, you add pesticide. If the soil conditions aren't great, maybe add fertilizer. But you have a general idea of knowing when to harvest and when to plant. And then you know how to kind of change with the variables over the course of a year. So there's a seasonality mode to that. When to plant, when to harvest, and everything else in between. Okay? But every year is also different, isn't it? You see that, Peter? Every year as a farmer, you don't plant on the same day. It might be weeks different. You don't know exactly when you're going to harvest. It might be weeks different, right? So that's the foreign exchange market, and quite frankly, many other markets have a pattern on top of the pattern. So you might have a seasonality pattern. So let me get my drawing tool again. Some of the things I try to keep in mind is seasonality. What does a year typically look like? Ebb and flow, right? Birth and death, right? There's a there's a process to that. But then there's a business cycle. Okay? And I try to match these two things. And now there's super cycles and stuff like that. Like underneath that, there's probably a real estate cycle. Okay, and that has to do with interest rates. So interest rates are influenced by the business cycle. Business cycle is influenced by seasonality and all this kind of stuff. So we're getting macro, and this is kind of where I'm taking you guys in the macro course. But, right, and then there's super cycles like 50-year cycle. Like, for example, in my mind, power is moving from the US to China. Okay? But there's a process to that. Right? So there's cycles inside of these cycles inside of these cycles. And this process here is a normal cycle. Okay? It's a normal cycle. Right? A mature economy and a growth economy. Okay? So I'm trying to line these things up. Okay, so a business cycle might look like this over a course of 8 years, right? And seasonality might look like this, okay? And then there's like a real estate cycle is sort of more like right? Like they're somewhat related, but they're on different frequencies and time frames, okay? By the way, I think, here's my theory of the Big Bang, or Big Bang Theory. What caused the Big Bang? Multiple dimensions with different frequencies, like business cycles. Okay? And every once in a while, just imagine every dimension on a different wave, right? Like a frequency, vibration. Remember, it's just energy, right? It's just electrical energy. So anyways, there's vibrations to each dimension, right? 1 dimension, 2 dimension, 3 dimension. We're in a 4-dimensional universe, okay? Mathematically, it goes out significantly beyond 4, okay? But every, bajillion years, right? They touch. Oh, that was supposed to be blue, sorry. right? Every once in a while, they touch. And they reset. So I trade the markets like my belief in the universe. Boom. Just reset. Matter, antimatter. If you don't understand, watch the original Ghostbusters. Okay, so let's go on now to commodities. Okay, I'm going to switch this chart. It's tired now. And I'm going to do it here. Okay. What was I going to say? Oh, I got an email from an FX boot camper saying, why didn't this counter trend? But I got this on Sunday, of course, this email. And so anyway, so I said the fundamental move here had to do with we expected OPEC to increase production. Instead, we got Saudi Arabia cutting, which means things were underpriced in the moment. So they're wondering, like, why didn't it reverse here? Okay. So fundamentals trumped technicals. And so technically speaking, this is still highly probable. Technically speaking, okay? Right? That would be simple price action. But we know when this all sort of lines up, we understand that this is not the same as this. Like, not all price action is equal. You should understand that this is the projected exit. And here's the reason this is important. People 12 days ago said or programmed that this is where they will exit. That's it. Why does it work? Because that's what everybody does. This is like my issue with people that, you know, they don't understand that they're trying to figure out what everyone else is doing. So someone wants to use VWAP again in Forex. I don't even know what the hell that is. But I'm like, why would you care? You should just know, like, this is where people are going to take profit. Like, what more do you need than that? Okay? And this, by the way, is the price in which bulls will buy. Okay? And that's where bulls will exit. What more do you need? Well, the price action. Okay? How about like a triple bottom, higher high, higher low? This is the buy, isn't it? Good. You were done. Right there. Right then and there, you're done. Now oil went up, hit the target, you're done. What is that indicator? That's called a pivot point. Dynamic standard deviations in real time. Oh. Okay, well then let me give you a VWAP. There's your VWAP. Done. Price action pivot points. Okay. But the thing is, here's the interesting thing. If you struggle to understand that as a bull, you should be buying at 47, and as a bull, you should be exiting at 52.5. Then I don't, like, if you don't know that, then it makes everything 100 times more difficult, right? Because you don't know where you're going. So it's hard to like plan anything, right? But if you had that in mind, then everything else gets a lot easier, right? For example, this is standard price action entry. So let me change everything to like green circles, okay? This is standard price action entry. In fact, I want to do this differently. I want this to be squares. Okay. This is called a roll reversal off of the bottom. And we already projected 47 would be the bottom. Pretty simple, right? Great. Then you get a higher high, higher low, right? There's your buy zone. It's just price action. Cool. Then you get a higher high, drag it across, there's your buy zone. Then you get a higher high, drag it across, there's your buy zone. And now what? You're up here. Now what do? You're out. You're done. There's nothing. You're done. Oh my God. That's so amazing. You nailed it. But all of this is basic. Pivot points, price action. Right? Kick off the bottom. You could even buy it there if you wanted to. I'm not suggesting you have to. I'm suggesting you have to buy that. And I'm suggesting you have to buy that. And I'm suggesting you have to buy that. And then I'm suggesting you're out. There was a little move in here, but I don't know if you take it off an M4. That's it. Now, you might have a million other questions, but all of them are irrelevant. That's all there is. Now, if you can perceive this with your mind, then you can carry it out. So I often talk about our mind's eye. You'll have to see this. And if you see it, you have no problems trading it. Okay? You're like, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 right? There might even be a buy here. And then they're out. Huh. Neat. Neato, right? So that's why I'm like, I don't think you need moving averages. I like them, of course. And you could use oscillators. They're pretty kick butt. But if you don't have a strategy, I don't care what tactics you have. You're going to be mediocre at best. At best, you'll be mediocre if you have no real strategy. Okay? Okay, cool. Gold! Gold! Let's move gold over. Let's do a confluence now. Is that too many lines? It just freaks some people out, right? All right, so then let's just get it to monthly. There's so many lines. Okay. This is the projected top for gold. Okay. Obviously, people are scared of 2,000 bucks. This is the monthly resistance. Okay. So, here's where we opened on the market. Okay. One thing we know, if you get up here too high, there's going to be a counter trend. Okay, great. So and we also are planning in this area here, dollar strength. We just don't know when it's going to happen, or really if it's going to happen, but we are planning. It's a thesis. Okay, cool. Do I sell now? No. 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 Do I sell now? You absolutely could. Okay. So let me zoom in a little. Okay. Once you get the lower low, you get a lower high. That is only a meaningful move if you were already a bear. Okay? Okay. Little Pip says, hey, Wayne, do you advise selling on pullbacks? It's the only time to sell. If I'm a bull, okay, if I'm a bull, I buy red candles. Okay? If I'm a bear, I sell green candles. Okay? It's the only way to do it. Okay? And if someone gives you advice otherwise, you should stop listening to them. I've heard that nonsense. It was probably the first gobbledygoo nonsense I ever heard from people that joined FX Bootcamp like 20 years ago. Okay? And they were taught things like, the number one thing back then, 20 years ago, people join and they're like, hey, I was taught that, okay, there's resistance. So I'll use red here, that when you break resistance, you wait for the third candle to close and then you sell. That was it. They would tell you to sell here. Because if you waited 3 candles, it would confirm that the market is now bearish. And it's the dumbest thing I ever heard. It's absolutely mentally gobbledygoo. But that's what people would ask about. So you're asking, do you advise selling on pullbacks? It's the only way. You don't sell a bearish move with a bunch of red candles. It means you've missed it. So what I'm telling you now is the opposite. I only sell green candles. So now you'd get some bounce and some bounce, okay? And now I'm probably watching this next candle and it does something in here and yeah, sell. Okay? Okay? Okay. And I remember the rule. So even before I started coaching, I remembered that rule. Not the rule, but, oh, did I kill it permanently? I remember the rule of me teaching myself, because I'm 100% self-taught. And I'd see these candles, okay, and I would sell. And the part I hated the most, I hated it. I'm telling you. I remember how much I hated. It was so painful. I still remember it. The situations are vague in my memory, but the pain is still right there. Okay? So I don't remember doing it anymore, but I just remember the pain associated with me doing that. Okay? It's funny, right? The pain is what I remember. And I hated the pullbacks. I hated being down 33 pips. I hated it. Hated it. Now, I got better over time and I found that if I stayed with it, okay, I ended up being profitable. But I remember hating it. Every single trade I would have this pullback. I hated it. I couldn't believe it. But then it dawned on me, and remember I'm self-taught and I'm not that bright, so it dawned on me one time, every time I want to sell, I should wait and not sell. Because every time I sell, inevitably there's going to be a pullback in which I go negative 33. So I started this pain to gain ratio analysis of my trading, and I'd go negative 33. And so therefore, if I go negative 33, I should make at least 50 pips or something like that. And it was the beginning, right? It was the beginning of me testing various theories. And so I realized that if I typically go negative 33, every time I decide to sell, I should look to enter 33 pips above where I feel like I should be selling. And I do my best. And then I realized that, right? I'm like, oh, that's interesting. I need to, once I made the decision, I need to wait, because if I could enter in the negative pullback, then I don't have the negative pullback, or I have less of a negative, right? So if I enter in, when I make the mental commitment to sell, if I wait for it to come back 20 or 25 pips, and then I enter, then I have less of that stress of the pullback, right? So I remember it took me a while to even figure out that Fibonacci did that. So Fibonacci just kind of randomly came in, and it sounded interesting and cool, so I studied it a little bit. And then I realized, oh, well, that's all we're doing is we're measuring that pullback. So I'll play with that tool for a while and see what kind of pullbacks I typically get. And so that's when I started looking at things like 382. What did that predict? 618, what did that predict? And then I started looking at extensions, and the extensions didn't work well for me, so I reprogrammed Fibonacci. And then I started looking at which extensions worked. And then, and remember, I'm self-taught, so I'm like, how do they come up with these weird numbers, right? So I started actually analyzing market data, and then I looked at the math behind Fibonacci, and I said, you know what probably important is the 121.4. And of course, even today, I still use a 121.4, and nobody will teach you a 21.4, right? A 121.4. And if they do, I taught them how to trade. So now if there's a guru out there that says he uses, or she uses, a 121.4 Fibonacci extension, that I had taught them, they were students of mine. And I know it because I didn't understand it. There was no training. So I tried to figure out the math myself, and then I used observations of the market, right? So that's how sort of Fibonacci came in to help me guess and time this move here. And then as I got better and better and better, instead of selling here, I started selling here. Okay? So I only sell green candles if I'm a bear. Okay? And here's the interesting thing. The 33 pips I found very, very, very interesting, because I later in life learned through somebody. I can't remember who it was. Can't remember who it was, but most people, lose or exit for a loss within 33 pips. And I remember that being interesting to me, because I had measured when I traded how much pain I had to take before I could get any trade to gain, and it was 33 pips. So what this told me is most retail traders, especially the ones that were taught this stupid strategy, they would lose either, they would exit here, 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 or here for a loss. So it took me a while, but putting all of this together, I start selling here. Okay. This is the candle. Okay. Has anyone here tested at least 100 times, right? That when you sell a red candle, it goes up. And then when you exit for a loss, sure as shit, it falls again. Has anyone had that at least 100 times? Like not just a couple of times or like, yeah, Wayne, I get that. That's happened to me a bit. No, but has anyone like 100 times? And you just can't believe it. Well, that happened to me as well. Before webinars existed, before there were books on Forex, when professional traders would laugh in my face about technical analysis. Okay, I taught myself this. I had professional money managers that I knew laugh in my face at dinner. We're having dinner. I'll never forget it. It was a Christmas party at a fancy restaurant in Palo Alto, California. And they're like, how's that Forex thing going? And I'm like, yeah, it's going great. And they're like laughing at me because only an idiot would want to trade Forex, right? And they're like, it's all market timing, right? Like you're using technical analysis? I'm like, yeah, I used to. Oh my God, that kid is such an idiot. What a loser. And they're talking about me. I'm like, oh my God. And yet I had the conviction and the strength to keep going. People would laugh in my face. But I figured this out. Okay? Figured this out. Okay? Do you know when I was studying for the Series 3 examination, I had sort of like a training, a training course on audio CD. And I would put it in my CD Walkman player and ride my bike around the swamps of San Mateo, out past Oracle and all that kind of stuff, all the way down to the San Mateo Bridge, and listen to it on CD. You're like, what? Yeah, like caveman style, right? Okay. So anyways, WTI came to the top. So there's correlations, obviously. Other things are going to do with the, right? Gold came down. Great, great, great. Okay. Bitty, can't you see? Sometimes your trades just hypnotize me. Okay. Wait, are you telling me it dropped from 40,000 to 30,000? What? Oh my God, it must feel great to get in late, huh? Must feel great to get in late. Dude, there's somebody right now crying because they lost $10,000 in a day on Bitcoin. 25% retracement in a day. That's what happens when you're late and you don't know what you're doing. How funny. Okay? How funny. So now what? Okay, you got to be careful, but let's analyze some of this. Here's 30,000. Does anyone think that that's random? If it's not nothing, then it's predictable. If it's not random, it's predictable, huh? So did anyone buy it at 30? Wait for it to catch up. Wait for it. Hello. There we go. No. It just won't do it on a 5-minute chart. It prints it as a gap. Wow. Oh, I finally got it. Okay, good. All right, neat. So what are you going to do? Well, technically that's resistance, so this would be a bad place to buy. You're supposed to be buying at support. Very difficult. Notice that you had no time to do it. So what does this tell you? This tells you that there were orders there. Someone just said, you know what? If Bitcoin drops to 30,000, I'll buy it. Done. Again, not random. I think most people that are in this right now don't even see it. They don't even know they're in it. Okay? Right? Most of the people in this trade don't even know they're in the trade. They're not even at work yet. They're going to walk in and say, holy shizer, I'm in at 30. Holy smokes, you're kidding me. It dropped from 41,000 to 30 today? Oh my God. Then they're like, oh my God, maybe I shouldn't be in it anymore. And now they're freaked out. Peter says it's going to fall again. Okay, great. So set up the trade. At what price are you going to sell it? 35? Kick it off the 4-hour 5? Okay? Then you better be ready. This is a potential right here. We're already there. Okay? So we're at 32, 33. So you got about $2,000 to get short, most likely. What is it that you're looking for? Okay? What is it that you're looking for? Okay? Huh? What is it that you're looking for? Hmm? Hmm? Okay? You gonna do it? What's going on in your mind? Okay, Pico says, I think it's going to go up again before it falls. Yeah, well, then use a stop loss. Okay? If you're at resistance and you're a bear, you need to be ready, willing, and able. Okay? Oh, you're saying pound dollar. Yeah, well then, right? But what you're saying, Pico, is you're throwing out the entire fundamental reason for dollar strength. So it sounds like a giant guess. Just even okay, put it this way, like it's not like you say, what do you all think? What y'all think? It's more like, what does the chart say? Like, even the idea of what do you think means you don't know. And that you want other people to share their guess. It should be more like, look at the chart. What does the chart tell you? You already know fundamentally whether, right, it's going to go up or down. So you're thinking, I guess, a market open scalp, and you think it's going to go up. For some reason, giant flows of money are going to work their way to the UK and out of the reserve currency. Okay, well, that's a giant guess. But either you have the technical authority, right, based on normal rules of engagement, you either have the opportunity to buy it technically or you don't. There's no, like, think. Right? That's the thing about technical analysis. It's so specific that it's either, right, like this is not a good place to buy even if it goes up. That's irrelevant. Okay? So it comes down to, what are you going to do? Are you going to sell the next 5A cross down? Are you going to sell it at resistance and jam a stop? Are you going to throw down a scalp? Are you going to throw down a spot? Are you going to throw down a date? Are you going to day trade this down? Like based on technical analysis, there's no thinking. Your thinking process comes from analyzing fundamental data. So I don't think I'm ready to buy pound dollar, even if pound dollar was beautifully set up, because I'm not ready to sell the USD, and I'm not quite ready to buy Great British Pound that is in the middle of a lockdown. And they're not thinking about removing the lockdown. They're thinking about making it more stringent. So I wouldn't understand why I would want to invest money in that economy in the moment. Now, if they were in deep lockdown and the fundamental data was horrible and likely to get worse, but there was a positive impact based on their lockdown and word on the street, aka sentiment, indicates that they're going to start easing a lockdown. Like they're nearly over and the data's looking all right, and the lockdown will likely come to an end soon. That's the moment I would want to be buying. But I don't get that right now. I'm not hearing that. Maybe it's the wrong birds whispering in my ear or something like that. Okay? Don't really know, but I'm not hearing it, so I'm not really interested. Even if it sets up, I don't understand why, so I'm not interested. Because remember, being a macro trend trader, I have to understand why first. And then after that, I don't mind scalping and market opens and stuff, but only based on biases. Okay? So the opinion should be, when you ask somebody, what do you think? You should be asking about when the lockdown in the UK will come to an end. You see that? And they'll say, well, the daily infections are high, but they're less than they used to be. And the prime minister said this, and the chancellor of the exchequer said that, and the minister of health said this other thing. And based on that, you believe, the worst of this new lockdown is over, and that they're in the next couple of weeks they're going to start concentrating on getting things better. Okay, that would be the opinion. Okay, and that sets up whether you should be scalping today, tomorrow, the next day. Okay, but right off the bat, you're suggesting you would rather sell the reserve currency and plow money into a lockdown. I'm not sure why you'd want to do that. And you might say, well, the VWAP indicator indicates oversold. Well, of course it's oversold. Every person on the planet is selling it, for example. That may or may not be true. Okay? So anyways, the language is what I'm picking on. Okay. Okay. Here we go. And I ran so far away. Okay, here we are at the big 19. Okay. Could be interesting, only technically speaking, of course. And then we're over here on the other side of the czar. And still, we might be at interesting prices. Okay, this is more interesting, but we might be getting there. We're at 16. Is that the number? Well, I'm not interested in a guess or a think. What do you think? I don't really care. Okay, I have to do my analysis. Thinking and analysis are not the same thing. Gathering data is analysis. Thinking about the data is analysis. And then from the thinking about the data, you come up with an opinion, otherwise known as a bias. So what do you think? Is it going to fall? Not the right question. First part of this is what? Every single bull on the planet would buy that. And I will repeat, I threw a special webinar for all my swing trading group we were right here, okay? And we were predicting dollar strength, risk off, profit taking. Okay, so that's all that means, okay? Now, based on that, this price is critically important and this price is critically important. Which one will create a top? I have no idea. So you have to think, well, if there is a top, what would it look like? Well, first of all, we have price action. So I wouldn't want to be too bearish until we get something like this. And I'd probably be short in here. The second one says it'll come down, hit the roll reversal, and go up here. At what point do I sell that? Well, at the exact touch or some sort of double top. So in that case, the short is either here or here, depending on your risk tolerance. Okay? Most likely it'll come down here, there'll be another bounce and then a breach, and that's just, again, price action, so maybe another one here. Now, all of this is impossible, okay, without a bias, without a strategy, without a plan, okay? Now, check this out. I've said it before, but I need to say it again so that you will learn and you'll take notes. Okay? Bearish here, bearish here, bearish here, bearish here, bearish here, bearish here, bearish here. Okay? We're talking about 8 to 12 weeks of bearishness. And then I come along and say, right around here, I expect up. How many people can confirm that? In fact, I just want you to confirm it because it's part of your learning experience. Just as long as you remember, tell me, do you remember? Remember, you have to fight to remember. Okay? So you are fighting to remember here. Okay? That's the market condition where I said, get ready for up. Do you remember? Okay? We were young and innocent then. And I said, there's nothing on this chart. Nothing on this chart. But you need to be ready, willing, and able. Holy schnickerschnacker. Okay? All right? Solano Club says, greeting, Wayne. Hey, greeting. Apology to write this again. I think it would be helpful to a lot. How do we see when the seasonality move is over? I have no idea. Okay? But a reversal in the direction of the long-term fundamental trend would probably be it. But for example, what I just indicated, I just drew 2 examples of what it would look like. Okay? Right? It would look like this, or it would look like, okay? But that's what I've already just talked about that. Okay? It's either going to look like this, or it's going to look like this. Which one? I have no idea. Now, the second part of I have no idea is, will this be the top of the year? What do you guys think? See, I have no idea. You have to understand that. I have no idea. It could do it again. This could drop from 15 down to 14 and a half or even 14, and then all the way back up to 15 in March. And in March, we're doing a double top. Or March could be higher. Okay? I really don't know, but I know how I'm going to trade. We don't know what Biden's likely to do and new policies. See, now that the Democrats control the White House, the Senate, and the Congress, right, the Democrats can get rid of Trump, but I guess by the time they get the power, he's already gone, so I don't know. But now he can start right off the bat saying, okay, I'm going to give more stimulus checks to people, but I'm also going to raise taxes. Holy schnickerschnocker. Well, on the day he says more stimulus, the dollar weakens. And on the day he says more taxes, the dollar strengthens. Will any of this influence the South African rand? Yes. I also don't know if or when China gets all pissy and starts playing the game with the new administration. We're delisting their companies on the stock exchange. Yeah, but if you have no accounting practices, then yeah, you should. How did they even get listed? That's the thing. Bajillion-dollar Chinese companies listed in the United States stock exchanges. And now the stock exchanges are like, wait, there's no real accounting procedures from these Chinese companies. We can't even tell if their financials are legit. Well, then how the frick did they get listed? Right? How amazing. But anyways, so there's could be retaliations with that, but they also need to meet with Biden to renegotiate what they negotiated with Trump, and we don't know the outcome of that. And if he plays it properly, it will be a long process. If he doesn't play it properly, they're all just going to unwind what Trump did, and then the whole thing was a waste. So we don't know all these things, folks, but I can interpret them into a bias. Okay? And from the bias, I use technical analysis to confirm or deny. So if this reverses here, I'm going to sell it. If it goes higher and reverses, I'm going to sell it. Is it going to be the top? How the heck would I know? Okay? But it could be. But I'm not saying it is, because there could also be another wave based on our uncertainty of the outcome of the future. But do you swing both ways like a broken gate? You were going to buy the dollar, you were going to buy the dollar, you're going to buy the dollar. Instead, you sold the dollar. Oh, no, right? Now the dollar's strong and you missed it. Whoa. Okay, well, what's your conviction? What's your bias? Where are we going to be at the end of the year? I've primed you and prepped you so much to have that bigger thought. So I hope you got it. I hope it works for you. I hope you make a ton of money in 2021, but you got to earn it through value, not guessing. Thank you for being here. Thank you for subscribing. Thank you for clicking the like button. Thank you for leaving comments on the video. Thank you to Traders Way for being part of our community. Thank you to you for being part of our community. And thank you for the loyalty and respect you show me every day. I appreciate that. And I appreciate you. I'll see you tomorrow for the macroeconomics course if you join fxbootcamp.com. Cheers.